Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Zidane. This week, we're covering the latest guidance on digital asset reporting. At Spidell's Federal Tax Update webinar, you'll get updated on everything that happened during the year, including TCJA provisions that expire at the end of 2025, beneficial ownership reporting requirements, the latest research credit developments, using AI in your tax practice, and more. Get details and register at Spidell.com. Proceeds from the sale of digital assets are required to be reported to the IRS starting in 2026 on new Form 1099-DA for transactions occurring on or after January 1st, 2025. Last October, the IRS released proposed digital asset reporting regulations in response to amendments to IRC Section 6045 that were made by the Infrastructure Investment and Jobs Act of 2021. In April, the IRS released Draft Form 1099-DA. The final regulations were issued on June 28, 2024, and require reporting by custodial brokers, which are brokers who take possession of the digital assets being sold by their customers. Custodial brokers include digital asset trading platforms, certain digital asset wallet providers, digital asset kiosks, and certain processors of digital asset payments. Most digital asset transactions occur using these types of brokers. The IRS will provide rules for non-custodial brokers in a different set of final regulations. Under the final regulations, brokers have to report gross proceeds from the sale of digital assets on or after January 1st, 2025. Brokers are required to report basis from the sale of certain digital assets on or after January 1st, 2026. Real estate professionals who are also treated as digital asset brokers are required to report the fair market value of digital assets paid by buyers and received by sellers in real estate transactions that close on or after January 1st, 2026. And for certain sales of stablecoins and non-fungible tokens, brokers can choose to report the transactions on an aggregate basis to the extent the sales exceed a de minimis threshold. A separate de minimis threshold applies for processors of digital asset payments. The proposed regulations required that taxpayers report transactions on their Form 1099-DA, but the final regulations do not require this. But taxpayers still need to collect the information, retain it for 7 years, and make it available to the IRS upon request. Concurrently with the release of the final regulations, the IRS also issued Notice 2024-56, which provides transitional relief from penalties for brokers that fail to report sales of digital assets. Notice 2024-57, which exempts brokers from information reporting for specific types of transactions until further guidance can be issued regarding these transactions. And Revenue Procedure 2024-28, which provides a safe harbor under IRC Section 1012, subsection C1, for taxpayers to allocate unused basis of digital assets held within a wallet or account as of January 1st, 2025. All of this guidance will affect how brokers and others are required to report digital asset transactions on Form 1099-DA. The August 2024 issue of Spidell's Federal Tax Letter contained a more in-depth article on this new guidance. For subscription information, go to Spidell.com and click Publications. That's all for this week. Join us next time for another episode of Spidell's Federal Tax Minute.